BlackRock, the renowned financial institution, caused a stir in the financial sphere with its submission for the iShares Bitcoin Trust on June 15. This move by BlackRock marks a significant shift in its stance towards a Bitcoin exchange-traded fund, ETF, which had previously faced consistent rejection by the U.S. Securities and Exchange Commission, SEC. The unexpected filing comes at a peculiar time, coinciding with the SEC's legal action against leading cryptocurrency platforms Coinbase and Binance, further adding to the intrigue surrounding BlackRock's collaboration with Coinbase and the filing itself. So what is going on between Bitcoin and BlackRock? As the world's largest asset manager, BlackRock's involvement would immediately lend credibility to the Bitcoin market, which is in dire need of such validation. With the SEC's crackdown on high-fee and flawed Bitcoin ETFs currently available, the introduction of an iShares Spot Bitcoin ETF would bring a much-needed facelift to the market. However, whether investors should consider purchasing this fund upon its release is another question altogether. Bitcoin's highly volatile nature and uncertain future mean there is no intrinsic value on which investors can rely. This aspect should be given more weight than any other consideration, including the fund structure. Apart from the investment potential, it is essential to understand where a spot Bitcoin ETF would fit in comparison to other offerings currently accessible in the United States. Presently, the Bitcoin ETF market comprises three main types of funds: grantor trusts, futures-based ETFs, and equity funds with ties to Bitcoin. The introduction of a spot Bitcoin ETF, as proposed by BlackRock, would establish a fourth category as it does not fall into any of the existing groups. Currently, the largest Bitcoin offering in the US is the Grayscale Bitcoin Trust, represented by the ticker GBTC. It functions more like a closed-end fund than an ETF, resulting in significant premiums and discounts compared to its net asset value, NAV, which are unrelated to Bitcoin's actual performance. Conversely, an iShares Bitcoin Trust would provide continuous offerings similar to other ETFs, allowing authorized participants to create and redeem shares at NAV at any given time. This feature would help maintain the ETF's price in line with its NAV. In contrast, Grayscale currently does not permit redemptions, leaving investors with the sole option of selling at the prevailing price, which is currently subject to a substantial discount. Futures-based Bitcoin ETFs do a better job of tracking Bitcoin's price, but they also introduce certain disparities compared to holding Bitcoin directly. These funds typically aim to hold front-month futures contracts, which expire regularly. As a result, portfolio managers must roll into the next month's futures contract, usually at a slightly higher price. This incurs additional costs for the fund, unlike a spot Bitcoin ETF, which would not face such expenses. Additionally, the Chicago Mercantile Exchange, CME, the platform listing Bitcoin futures, imposes position limits to prevent any single entity from exerting excessive control over the market. In cases where limits are reached, as occurred in 2021 with the launch of the ProShares Bitcoin Strategy ETF, ticker BITO, portfolio managers have to purchase longer-dated futures contracts further along the futures curve. Generally, the farther a futures contract is from its expiration date, the less accurately it tracks the asset's spot market. When it comes to effectively tracking the price of Bitcoin, a spot Bitcoin ETF like the one proposed by BlackRock would undoubtedly offer an improvement over existing options. Furthermore, it is likely that such an ETF would come with lower fees. Currently, Grayscale charges a 2% fee, while BITO charges 95 basis points. This aspect is a primary concern for investors and is highly likely to see improvement if BlackRock's spot Bitcoin ETF enters the market. The ultimate question that arises is the reason behind BlackRock's decision to file for a Bitcoin ETF now. Despite over 30 previous filings for spot Bitcoin ETFs, this is the first from BlackRock. It is possible that the impending outcome of Grayscale's lawsuit against the SEC, which challenges the rejection of a spot Bitcoin ETF, has influenced BlackRock's timing. Alternatively, BlackRock may believe it has developed a suitable surveillance approach to address the SEC's concerns regarding potential manipulation in the Bitcoin market. We eagerly await further developments to uncover the true motives behind BlackRock's move. With BlackRock's immense reputation and influence, the creation of a Bitcoin ETF could potentially bring a newfound level of legitimacy and acceptance to the cryptocurrency market. It signals a growing recognition of Bitcoin as a viable investment option, not only among retail investors but also within traditional financial institutions. This move could pave the way for greater adoption of Bitcoin and potentially attract a broader range of investors who were previously hesitant due to regulatory concerns or the complexities of purchasing and holding cryptocurrencies. The introduction of a Bitcoin ETF by BlackRock could also alleviate some of the current challenges faced by investors in the crypto market. Unlike existing options, such as the Grayscale Bitcoin Trust, which often trades at significant premiums or discounts to its net asset value, a BlackRock Bitcoin ETF would provide continuous offerings with the ability to create and redeem shares at net asset value. This would potentially result in a more accurate reflection of Bitcoin's actual market performance and reduce the risk of investors paying inflated prices or selling at discounted rates. Furthermore, the establishment of a Bitcoin ETF by a reputable institution like BlackRock could lead to increased liquidity and stability in the cryptocurrency market. The ETF structure allows for easier buying and selling of shares, attracting institutional and retail investors who prefer the convenience and regulatory oversight provided by traditional exchange-traded products. This influx of liquidity could potentially contribute to smoother price movements and reduced volatility, making Bitcoin a more attractive asset class for a wider range of investors. In summary, BlackRock's decision to create a Bitcoin ETF has the potential to shape the future of the cryptocurrency market. It could bring increased legitimacy, liquidity, and stability to Bitcoin, attracting a broader range of investors. However, investors should remain mindful of the inherent risks and volatility associated with Bitcoin investments. As the landscape continues to evolve, it will be fascinating to observe how BlackRock's ETF and other developments influence the trajectory of Bitcoin and its role within the broader financial ecosystem.